Hey, good evening. Rick Prosser from StockChartSense.com, and it's April 16th, and let's just get right into it here. First of all, let me just start out, before I actually get into the analysis, let me start out with saying this. A couple things. Number one, be careful in this market right now, please. I really want you to be careful. I mean, this market, the conditions have changed. I'm not telling you that we're dropping 20% or anything like that. I'm just telling you the market has changed. And what I really want to stress before I actually get into the analysis, and then we'll look at the analysis here, and you'll hopefully see more of what I'm talking about. But I really want to stress to you is this: when the market changes, guys, as a trader or even a long-term investor, you need to learn to change with it. One of the biggest mistakes, especially traders make, I guess if you're a long-term investor, you can make this too, but that's kind of a whole different story, and I'm not even going to get into that. I'm going to stick mainly with trading. So what I'm talking to you about here really applies to traders. The biggest mistake most traders make is they don't recognize when the condition of the market is changing, and they're behind the 8 ball. And what most traders will do is they'll try to trade the market that once was instead of what's here and now. And guys, that's dangerous. When you do that, you're destined to lose money. Because here's the thing. This is the Dow Jones here, and simple as this, guy. Look, here was the move. Back here, you could almost pick any stock out there, enter a trade, and make money. You could do it if you were just accidentally bought a stock. You literally could close your eyes and go blinded for a minute and just pick a stock, hit the buy button, and probably make money on it. In most cases, because just everything was going up. Back here, all through here, you can enter trades sloppy and still make money. In other words, you could actually be an amateur back here making mistakes in the market and come out ahead and thinking you're a genius and thinking, my God, I found the way to the promised land and to wealth. But here's the problem. Today, you can't make that same mistake. Today, if you would actually buy any stock out there, you're probably going to end up losing money, because the truth of it, a good bit of stocks are going down. Here, you have a lot of stocks heading down. Here, you had a lot of them heading up. So what I'm trying to tell you is, you got to change your thinking here a little bit. And what you cannot be is you cannot be as heavily invested here, all through here. Let me get some of these arrows out of the way. You can't be as heavily invested, here today as you were here, all through here. If you have as many stocks in your portfolio today as you did here, and without taking profits, and you still have a lot of them, you're going to get killed, because it's a different market now. Things have changed. This is a different condition. So I'm really stressing that, and I know I'm banging the table here, and I know you can hear me. I keep repeating myself, but I'm telling you it's important, because I've seen too many people get hurt. And by the way, I've done it. I've been too involved, and I've traded the market. I've traded this market here when it was here now, thinking it's still here. And guess what happened? I got killed. What would you be doing? Well, when the market goes down, you're going to be buying some. So the you get a particular stock, and it goes down a little bit, and you go, well, I'll go ahead and buy a little bit there. And then you go, okay, if it comes down, to here, I'll go ahead and buy a little bit more and buy a little bit more. But what happens is it keeps going down, down, and down. Now, that's not always a bad plan, but here's the problem with that plan. It wasn't part of your plan. You bought a little bit because you were used to trading over here, that you'd buy some and the stock would go down a little bit like this, and you go, well, I'll buy a little bit more. So you bought some, and then all of a sudden it started going up, and you started making a boatload of money because you doubled down and you made a lot of money, right? So you're thinking, well, I'll do the same thing over here. It goes down a little bit, you go, well, I'll buy some more, because when I was doing it over here, it worked. But the problem is, it's not working here, is it? You buy, it goes down, you buy a little bit more, and it keeps going down. And it keeps going down, and then you're starting to lose money, and guess what? You sell right here, And that's when the market rebounds and starts heading back up, and you go, boy, I'm such an idiot, I'm so dumb, I'm so stupid, why did I do that? So then you go, okay, the market's going to leave without me, so you buy right here, and then the market rolls over and starts to go back like this, and you go, oh, I'm such a dummy, why did I buy way up here? I'm going, okay, so I'm going to go ahead and sell, and then the same scenario happens over and over, and all the money you made over here, you just gave it all back right there. The death cross. Guys, you got to be careful. You got to understand when the market changes. Okay. Now, so what I'm doing here is I'm actually giving you a little bit of the premium content that I give over at StockChartSense.com to the members there, the paying members. This is a little more of the premium content. I'm not going to give you all of it, but I'm going to give you some of it here. What I'm going to talk about today is some of the averages, and then we're going to talk about Apple. But generally, in the premium content for the paying members, I would go over what I'm going over with this portion here with you, but I would also be looking at several sectors as well as several stocks in those sectors that are on our watch list, and then looking at buy points and all that. So you're going to get some of the premium content today, and the only reason I'm doing that is because I really don't want to see anybody out there get hurt, so I'm giving it to you for free just because I want you guys to be careful and aware of what's going on, especially if you're a new trader out there and you're just getting into this stuff. One of the biggest problems with a new trader is they get in the bull market right here. They come in right at this time. They get in right here, and they think, man, I am the dude. I am like awesome. I am the man, the woman. I am it. Wow, because you're making this money. But what happens is when the market changes, you as an amateur don't recognize that, and again, you're trading over here and you're getting killed. And I really just don't want to see that happen. I've been there, done that, and I don't like it, and I don't want it for you. So let's just go ahead and get into this here. Today, basically, I mean, really not that much of a day. I mean, the truth of it is, volume is average to low. The thing that's happening here on the Dow, guys, is look, the down days are higher than the up days now. Okay, I mean, you're getting a downdraft here. So what's happening now is you're getting this downdraft, a break of the 50-day moving average, which again has not happened all this time. God, it didn't happen until it was back here in December. I mean, that's when it last broke the 50-day moving average. So this is different on high volume at that. And then what happens is you get this rally back up to the 50-day moving average, the break, which now, remember, this was basically support. Now, of course, it never hit the 50-day moving average here, but when it hit here, it was support. But basically what's happening now is it broke the 50-day moving average, and it rallies back up to the 50-day moving average, and then it kind of gets stuck there. Now, there's a couple reasons for that. One, it's the 50-day moving average, and it's 13,000. 13,000 is a key level. So you're having it come right back to there. So, and as you can see today, it rallied and then it sold off. The market sold off. And so it really didn't close above the 50-day moving average. So what can we expect here? I think we can expect some more downside. It may consolidate here for a little bit while and then maybe go down. I don't know if we're going to get this dynamic, that it's going to consolidate and then rally up. You might get a little bit more up somewhere into this area right here, and then I can see it rolling back over and maybe coming down. How far it goes down, I don't know, guys. I have no clue. I'll tell you what. I'll make you a deal. I'll tell you when it gets there. I don't know how far it's going to go down. I just know the market seems to be the least resistant for the market as of right now seems to be to the downside. Now, also what you got to keep in mind too here on the Dow is you basically got a triple top here. 1, 2, 3. So this 13.25 level, it couldn't break through it. So that's a triple top. So that means something. That means something. So again, I just get this sense the market wants to come down. How far down, I don't know. We'll have to see. And again, we're in the midst of earnings season. That's going to have a lot to do with the market. So I mean, if all of a sudden earnings turn out to be just beyond expectations of all the money managers, we might just all of a sudden start getting this and break through there and God go to 19,000. I don't know. I doubt if that's going to happen. It just seems to me the market wants to roll over. But I want to. This is the Dow. But what I want to do is I want to show you the diamonds here. Now the diamonds is a mirror of the Dow, but the difference is the diamonds are actually tradable. They're tradable instruments. The Dow is not. That's just the makeup of stocks, right? Well, what I want you to see here is today it didn't even rally. I mean, it didn't rally. Look at the volume. Look at the up day. Look at the down days. You know, it came right to the 50-day moving average, but it was down today. So what is that telling you? And there's your triple top again, so you can see it mirrors it. But you know, this is actually showing you here, I mean, the traders were actually selling it. You know, a big difference, guys, is this, is now any strength that comes into the market, traders are selling it. Over here, it was just the opposite. Any weakness that came into the market, traders were buying it. So, guys, the market is more under distribution than it is under accumulation. You know, traders are wanting to sell. They're using any type of strength to get out of the market. So, that needs to tell you something there. Here's the spider, which is the S&P 500, mirrors that. But again, same thing. Look at these high volumes, big volumes day. I mean, you know, on the up day it was not, I mean, it was average volume. You know, the down days are average to a little above average, but this one actually closed a little bit above the 50-day moving average. So actually, the S&P looks a little better than the Dow. But again, I just get this sense that it's just kind of marking time here before maybe it rallies just maybe a little bit. You know, maybe to this area here somewhere, and then not exactly where that was at, somewhere like in here. A little arrow don't like to cooperate too much, so I don't know, maybe something like that. You get the point. So somewhere in this area right here. But anyhow, you know, it could rally up to there and then start to roll over and come down. I just get the sense it wants to come down. Now the main reason I say that is for this. It really has to do with Apple. Guys, Apple has had a huge move, as you can see right here. But the thing I want you to see, look at the volume. It's increasing to the downside. And you got this bit of a volatility squeeze here. You know, and it's pushing out to the downside. You know, I can see Apple coming to 550, and definitely, I can see it definitely, you know, I hate to say definitely because it might not do it, but it sure looks like 550 is a marker. I mean, it sure looks like it wants to touch 550 and visit that level for two reasons. It's 550 and it happens to be real close to the 50-day moving average. So it looks like it wants to hit that, and it's doing it on high volume. Now, I've said before, and if you listen to that video, I said I was using Apple as my key barometer as far as the market health, what the health of the market is. And what do I mean by that? Well, if you think about it, you know, Apple has been a beloved stock of you know, money managers, and these guys have been buying this stock all the way up, and it takes a lot of money to push a $500 stock, you know, that once was $400 to $650. I mean, that isn't your average Joe on the street. That's big money pushing that up. And I just read an article the other day that said Apple was the most owned stock by hedge fund managers. Well, let me tell you something. If they're deciding to sell Apple, if they want to sell Apple, which is their beloved stock, it's, you know, guys, they were buying it here. I mean, they were buying it. Why? Because they wanted in. Now all of a sudden they're wanting out. If I was a hedge fund, and put yourself in a money manager's position here, and put yourself in their shoes. If you bought this stock down here, anywhere down here, and it's up here now, and you see this type of selling going on, what would you do? Would you hold it here? No. You know why? Because their investors are going to call and say, dude, you know, Apple's going down, and I once had a profit, and now that profit's getting smaller and smaller and smaller. What are you doing? You know, they're going to sell. If they sell their beloved stock, are they not possibly going to be selling some other stocks too? Why? Because the other stocks had great runs too. Apple wasn't the only stock that had great run. A lot of stocks did. So would it not make sense to you that if I'm a hedge fund manager and I'm selling Apple, my beloved stock, would I maybe not sell some other stocks as well? So my point is the market actually rallied a little bit today according to the Dow Jones, and even the S&P 500 I think was up a little bit. Well, not very much. There it is up there. And well, of course the NASDAQ was down, but that was a lot because of Apple. But anyhow, the point is I just think if Apple starts going down, I think you're going to see a lot of the rest of the market go down as well. Again, how far, we don't know. I'll tell you when we get there. But the bottom line is I think you're going to see some more selling just because Apple's being sold. That's a beloved stock. So I hope that makes sense to you. You know, and also what I want you to see here is, you know, on a weekly chart with Apple is, I mean, guys, one thing that's different here, and again, the pattern has changed. Look at the Bollinger Band. Look how this stock just stayed above the upper Bollinger Band all the way up. This is, again, weekly chart here. You know, boom, 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 and then it started to peter out here, and now you're getting this. Now look, you have 2 weeks basically down right now. That hasn't happened since, I mean, Lord have mercy, that hasn't happened since back here, in this area. Yeah, I don't even know if I'd consider that one, but back in this area, we're talking back in November, to have 2 weeks down. So that shows you the pattern is different. Now, let me ask you this. Could you see from the weekly chart, could you see Apple hitting 550? And the answer is yeah, you could. Could you see it hitting possibly 500? I could see it possibly hitting 500. I could even possibly see it coming down to the 450 level. I mean, that's all possible. Is that going to happen? I don't know if that's going to happen. You got earnings coming up, so I mean, but it could happen. Now, I'll tell you this. I hope it does happen. God, I hope. I'm praying it happens. Why? 500 compared to 650. Don't you think that's a little better price to get into? I would love to get in down here, or get into here, or get in here. I would love to get in there, because somewhere Apple's going to come down here somewhere, and guess what? It's going to become the beloved stock again that all the hedge fund managers are going to want into. And guess what? It's going to stop doing this and start consolidating, and then start working its way back up. I think ultimately Apple does go higher above 650. I mean, I could see it going to 700. I don't think it's tomorrow. Maybe it's at earnings time, you know, and because you got earnings coming up here, so maybe it's then. I don't know. But the bottom line is simply this, guys. The market is a little shaky right now. I just think, just be careful. What am I telling you? Am I telling you you can't trade on? No. What I'm telling you is don't be piling in. Don't be piling in, because as soon as you pile in, you're going to get yourself killed. And make sure you have risk management, money management. Have some controls in place. Be careful of buying on the way down. You know, now if you're a longer term investor, there is a strategy to that. If you'd love to learn how to do that, shoot over to StockChartSense.com and sign up for the premium content. I actually teach you how to do that. Some shameless promotion in there, right? But anyhow, I really do teach you how to do that, but I'm not going to get into that here. So just keep that in mind, and just, you know, just watch the market, and just, like I said, don't pile in. I don't want to see anybody get hurt out there, but it sure seems to me we could have some more down days here. Especially with earnings here. I mean, God, if anybody starts really missing earnings, I mean, I could just see that really, you know, pushing the stock market down even more. And might see a little bounce here with the Apple tomorrow, but I just see a little bounce. Might just, my gut is telling me it's going to be sold into. If it gets down to 550, that might act as a support level, and it actually might catch a bid from there, especially as it goes into earnings, because people might be, you know, we'll just play the earnings deal. But here's the thing with earnings, guys. If they don't, and the only other thing I could think of too with them really selling Apple is there could be a concern that Apple might not be as, you know, they might not hit the nail on the head like they did last time. Because I just read an article today that the guy said that Apple's price for perfection, which simply means that if they don't do the absolute superb job, the best job in the world, it could really get hit. And I agree with them, and I wonder if the market's not telling us that right now, that a lot of the hedge fund managers are thinking the same thing, that if Apple doesn't put out a stellar number even better than they did last time, that it's not really going to get hit. So, but we'll see when that happens. But here's what we know for sure. It's selling off. So don't be too heavily involved in Apple. If you have some profits, you may want to consider taking them. So listen, that's it. I hope that helps you. Again, that's a little taste of what we actually do over there at StockChartSense.com. So if you like that, sign up for the premium content. You get a lot more of this, as well as we go over sectors and actual. We put a lot of stock, you know, stock picks on our watch list, and keep an eye on them, and, you know, wait for them to get the good buy points, and then buy them up, and hopefully, you know, ride them up a little bit. So have a great day, and be careful out there. Take care.